What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and I'm going to take a look at some charts today. This is something I talked about back on December 2nd, the Amazon versus Bitcoin chart. And if you guys watched that video, you can go to my YouTube page. It's right on there. But if you watched that video, I talked about the Dow Jones and what happened in 1929 and how it was similar. But today, I want to bring you a new chart that I got off somebody off Twitter, and I will give him credit, unlike a lot of people that are talking about Amazon when I came up with Amazon first. But anyways, we're going to talk about it. Here's the Amazon chart. If this was to play out, like I said, the Bitcoin bottom would be sometime the middle or end of 2023, if this was going to play out. And it could go as low as 3,700 if it played out in the same way that the Amazon bubble played out in the .com bubble. Now, this is the chart I posted this morning on Twitter. Give me a follow on Twitter. It's at CryptoSavvy1 right here at CryptoSavvy1. There are some fakes out there, so be careful. But anyways, I posted this out there and I gave credit to this guy right here. It's HOZ, Check him out if you haven't. Pretty good find he's got here. So this is the chart he made, and he points out a very specific, if you look at this here, this here, and then the lower low here, right? So you had a higher high, low, lower low, just like we had back here. And this looks eerily similar. It doesn't mean it has to play out, but a lot of this stuff seems to be lining up. And at the very least, people should prepare for the worst. Even if you think it's going to go higher, you know, you could be right. Do whatever you do, but always be aware of things that could happen. History often repeats. And this is the Dow Jones right now. This is the 1929 Great Depression here. Could this go up a little bit higher? Definitely possible. But it's looking eerily similar. And I just want to point this out. I think it's better to be aware of this stuff than just push it to the side and believe that you could just hold stuff forever and you're going to get rich. Now over here, when this happened, again, everybody was scared out of the dollar. And who got in the dollar? The big boys that dumped on everyone. So everybody went broke here. And the big money stayed in power and continued up for, 90 years or whatever. So just something to be careful. Keep an eye on this. And let's take a look at the weekly chart on Bitcoin. We'll go down into the smaller time frames also. Make sure you guys smash the like, subscribe to the channel, and leave a comment after the video. That all helps the YouTube algorithm. And I really appreciate those of you that actually take the time up to hit the thumbs up. It's not that hard. And then leave a comment down below. I do appreciate it. So looking at the weekly chart, we talked about this being a possible bear flag, right? We've been talking about this for a long time. I've been getting a lot of hate on it, but it seems to be playing out, and we did seem to break the weekly here. But we do have another weekly major level we'll take a look at here in a second. I do want to remind you guys, the free trading competition where it doesn't cost you anything to join. All you need is an email. I'm going to show you how to do that in a second. You can win actual money, and a Sappy Seal NFT is one of the prizes. So anyways, let's take a look at this measured. If this is a bear flag, that would get us down to as low as 7,400, somewhere in that range. So again, there's a bunch of different levels we could get to if we do continue in a longer term bear market. We'll take a look at all those. I'll also go into the smaller time frames to give you a better view of what's going on in the more immediate future. So anyways, I drew this moon on here just as a joke. Everybody says we're going to the moon, and that could be the moon. Anyways, let's get into it. So this is the weekly, right? We pointed out this hidden bearish divergence right here weeks ago. Did play out nicely. I was also talking about on the monthly, we had 3 black crows. I'm not going to go over that, but I made a video back then. If you guys want to check out my old videos, please do so. And right here, 35,000. So it's actually a little lower than that. It's around 34,850. We do have some targets that show us getting there. Will we get a bounce there? That's the question. If you're a trader, you might want to long there with some stops below. If we break that, you might want to put a short in there. All up to you, obviously. I don't give calls. I show you what I see in the markets and what I'm doing in the markets. You are responsible for your own decisions on what you do. So anyways, so if we were to break this, you guys know my next target is in the mid to lower $20,000 range, right? So we have broken below the weekly RSI. We got the bull trap right here and then came back down below. So we have plenty of room on the weekly to go more downside. So keep that in mind while you're playing around with the charts. So I'm going to explain how to enter the contest. It is the Savvy's Trading Clash contest on Prime XBT. I have a link down below. You have to use my link down below to get in on it. And once you click on this, go to the contest section, click on here. And again, all you need is an email to sign up. There's no KYC, so just use an email. Like I said, it's totally free. You're not risking your own money. If you do decide to trade, this is a great platform to do so if you do want to trade with your own money, but always be careful. Don't jump in with high leverage. Don't throw a bunch of money in, especially if you don't know what you're doing. But anyways, this is totally free. There's 382 people signed up. Let's get this to 1,000 if we could. And there's $10,000 worth of awards that will be granted to the winners of the contest. Now, one of the awards is the Sappy Seal. That's the first prize, which was around 5,000, I think, at the purchase time. And if you look at this shows you the rest of the prizes. Number 2 is 2K, 3 is 1K, 4 is 700, so on and so forth. Definitely check it out. And the code to get in there is 777777. So 6 sevens is the key to join the contest. And again, you need to use my link down below to join. But again, totally free, guys. So why not? All right, let's take a look at the daily. So if you guys have been watching my videos, you know we had the 5 waves down here. We were expecting 3 waves up. Didn't think it'd go that high, but it was an ABC correction. That is why I remained bearish. And look at where we're at now. Then once we broke this rising broadening wedge, we take a measured move of that, measure the widest point of the wedge right here to where it broke. And that also gets us to that lower to mid $20,000 range. Now, I do expect us to most likely bounce in this area. It doesn't have to, and if it doesn't, it will probably be a capitulation. But like I've said in the past, everyone will get bullish again, just like I talked about back here. Once we get a bounce here, everybody will be screaming for the bottom. If you were around for 2018, you'll know 6,000 was just like this. Everybody said it would never break. So just something to keep in mind. I'm not saying it has to happen. I'm saying you need to take a look at this stuff instead of just believing what everybody tells you all over the internet, okay? So be responsible, guys. Anyways, if we do get down here, get a huge bounce, we could come up into the $40,000 range, catch the bottom of this bear flag, maybe, depending on if, when, and where, you know, it could be up around the 40,000. Then we may range in this area for, you know, 6 months or whatever. I'm not giving exact times because I don't know the exact times, but if it did range around in here, bounce around on this for a while, when this breaks, the next target is going to be this bear flag, and that is going to be around 6,500 if it does break that 24. Now, could we just start a new bull run at 24-ish like everybody thinks? Very possible. Not a guarantee. Nothing in any market is a guarantee, guys. So let's take a look at the 4-hour. So in the 4-hour, you guys know I had these channels up here. A break above this will be bullish. Break below this will be bearish. We are below that now. We're going to zoom in here. Take a look at what's going on. So I also have the measured moves here. If we measure the top of the channel to the bottom, gets us around that same area, lower to mid $20,000 range, which I've been looking for since we broke that rising broadening wedge. I was actually looking for that back here. If this didn't break the high, was still calling for the 24. Now, if that would have happened, I think that would have been a continuation of the bull market. Remember, it's the path the price takes. It's not about the price. It's the path it takes to get there. So this made me even more bearish with this correction, saying that I doubt this is going to hold long term. I think we'll break below that. Again, I could be wrong. So anyways, let's zoom in here a little bit and take a look at the more immediate price action. So where we're at right now, you can see we have this. Let me get this out of the way. You can see we have this falling channel here. The bottom of that falling channel is around that 34.8, which would match up with the target for the bottom of the weekly right here. That would all match up nicely. So maybe we get a nice bounce if we get down to that range. Now, if we break up past this 8 EMA, also the top of this channel is around 36,150. We could come back up to, if we take a measured move of that, we break that, we could be coming up to somewhere between the 37.2. Let's put a target on there. So it could be somewhere around the 37.2 to the 37.6. Now 37.6, 37.7-ish, depending on how long it would take. If it took weeks and weeks, it would be higher. But if we came up and made a big pump up to this range, 37,250 to 37,627. Let me put some targets in there, or at least I'll put that one in there. Okay, right there. So this would be the first point I'd look for a rejection. If we break that 36,150 range, look for a rejection somewhere between this 37.6 and 37.2 area. And I believe we continue down from there to much lower prices. Now, if we just drop down here, we may get down to that 38.4 range and then get our bounce from there. But I would not be bullish at all unless we broke the bottom of this bear flag again and started opening and closing at least a daily candle in there. That means one candle open and close the same candle above this trend line. Then that would possibly be invalidating the bear flag. But until then, I'm still looking for these lower targets, guys. We'll see what happens. I will keep you updated. So make sure you smash the like, subscribe to the channel, and leave your comments down below. Let me know what you think. And I appreciate each and every one of you guys. I truly do. Thanks a lot. Thanks for watching. I'm out of here.